Hello everyone, welcome to Cheongfuli Weekly Report. Here we bring you the latest China's steel market prices and analysis every week. This week, the spot price of steel has stabilized to some extent. Domestically, the spot price of hot-rolled coils remained unchanged this week, while the price of rebar decreased by 10 yuan per ton. On the macro front, the US ADP employment data for August was weak, with only 54,000 jobs added, falling short of the expected 68,000. Currently, the probability of a Federal Reserve interest rate cut in September stands at 92%, and the probability of a rate cut in October has also increased. As the pricing based on rate cut expectations is already relatively clear, caution is required regarding potential expectation gaps in September caused by rising inflation. Domestically, the sentiment against involution has weakened, and after the conclusion of the military parade, it is necessary to seek other policy-driven stimuli. On the industrial side, the weekly output of the 5 major steel products dropped significantly, decreasing by 239,600 tons week on week, while daily molten iron output fell by 110,000 tons. Among them, HRC output saw a substantial decline of 105,000 tons weekly, with the military parade being the main reason for the output drop this week. Therefore, a rebound in steel output is expected to be seen starting next week. On the demand side, affected by the military parade, demand decreased by 299,400 tons this week, and the recovery of apparent demand needs to be further observed. As the off-season draws to a close, the apparent demand of some steel varieties will also register a certain month-on-month increase. In terms of inventory, the pace of inventory accumulation for the 5 major steel products accelerated this week, with a total inventory increase of 328,200 tons. Currently, there is no accumulation of pressure on factory inventories, but absolute inventory levels have begun to show pressure when compared year on year. In summary, the sentiment against involution has gradually cooled. During the off-season operation of the steel market, contradictions between supply and demand in fundamentals have accumulated to a certain extent. Given the sharp decline in molten iron output this week, it is necessary to monitor the speed of molten iron recovery. Nevertheless, excessively low molten iron output has instead led the market to trade on expectations of raw material inventory replenishment, resulting in firm raw material prices. In terms of profitability, steel mills' profits have been significantly compressed, but no major pressure for production cuts has been observed among steel mills so far, making it difficult for the market to trade on expectations of negative feedback. Looking ahead, the room for steel price increases during the off-season has not yet opened up, but there is cost support at the bottom. Before steel demand becomes clear, prices are expected to mainly fluctuate. For procurement, consideration can be given to increasing partial procurement volume after spot prices decline. From the institutional perspective, it is observed that the demand remained resilient during the military parade. Moreover, against the backdrop of a significant drop in molten iron output, there is limited room for further decline in the prices of finished steel products. In the short term, steel prices will maintain a bottom-range fluctuating trend. For September, attention should be paid to the following aspects regarding the steel market: the demand situation during the peak season, the status of coal mine safety inspections, as well as further monitoring of overseas tariffs, domestic macroeconomic policies, and industrial policies. To summarize, recently, steel prices have found support at the bottom and tend to fluctuate. Among steel varieties, long steel products, billets, etc. are recommended. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.